India's central bank has finally cut interest rates, paving the way for the country's lenders to also follow as well. India saw a drastic drop in growth last year, and this latest move could help boost the economy. Shweta Bajaj reports from New Delhi.
After a rather strong approach to keep pushing interest rates up in an effort to control inflation, the Indian Central Bank has finally eased interest rates. The rate at which banks borrow from the central bank, repo rate, has been cut by 0.25% to 7.75%. The cash that banks are expected to keep as reserve, cash reserve ratio, has also been slashed by 0.25% to 4%.
We've decided to reduce the policy repo rate under the Liquidity Adjustment Facility, LAF, by 25 basis points, bringing it down from 8% to 7.75%.
The growth projection for the current financial year 2012-2013 has been slashed to 5.5% from the earlier 5.8%. Indian industry says what it needs is a continued softening of interest rates.
But there is a concern overall that the geopolitical situation remains volatile, and that could again put fuel prices into disarray. So there a very solid indication that growth is back on the agenda, but clearly issues and concerns around how much interest rate reduction we can see in the future.
India has seen a sharp fall in its growth, largely due to harsh policy stand and lack of reforms. With India's industrial production at a dismal low and India's growth at a 9-year low, the industry has been looking at the central bank for cuts in rates. But the Indian Central Bank's explanation is that it's not just the monetary policy. The government will have to take some harsh fiscal policy measures to up the Indian economy. With the reform process back on track, the cut in interest rates is expected to push the economy. Shweta Bajaj, CCTV, New Delhi.